Uber has been an interesting stock to follow this year. On the one hand, the company's performance in terms of revenue and profit and cash flow has been soaring. And on the other hand, its long-term viability has come under increasing pressure with the development and increasing pace of development of driverless car technology, which threatens to take significant market share from driverless companies like or ride sharing companies like Uber. Now, I've argued that the driverless technology is not necessarily going to be a bad thing for Uber, and I'll share the link of those arguments at the end of this one. But the primary case of that argument stands that one of Uber's bigger costs is for drivers. And so if it can license driverless car technology at a lower price than it has to pay the drivers, it might be a net benefit for the company. Sure, the impact could be incredibly volatile, where it can be really bad or it could be really good. And so it adds to the riskiness of the business. So all that being said, how much do I think Uber stock is worth today, or what's the intrinsic value of Uber stock? I'm going to do an intrinsic value calculation using a discounted cash flow valuation model to determine where I think Uber stock price is worth today. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so I'm going to share with you where I'm getting all of the numbers for this price estimation. And first, I need Uber's cash flows expected over the next several years. And starting with the 2024 expectation, end of year 6.45 billion in free cash flow. That's expected to grow to 7.7 billion, then to 9.9 billion in 2026, to 11.1 billion in 2027, and 12.76 billion in 2028. Now, this is what Wall Street analysts that are following Uber stock, this is what they think the company's free cash flows will be over these 5 years. Now, nobody knows what's going to happen in the future, so these are estimates and assumptions, and we need to take them for what they are. These are not sure things. So I also need Uber's market cap. Right now, it stands at 137.65 billion. That's down from closer to 180 billion just over a month ago. And so the price is under pressure, as I highlighted earlier, but it's still up from the beginning of the year. The next number I need is the number of shares outstanding, and right now Uber has 2.15 billion shares outstanding. The company's total long-term debt stands at $11 billion, and its cash and equivalents balance stands at $6.15 billion. I also need the beta of Uber stock, which as of this recording stands at 1.34. All right, so now that we have all the numbers and estimates we need to make the intrinsic value calculation using my DCF model, let's jump to my DCF model right now. So this is as of December 5th, 2024. And let's start here with the free cash flows of 2024 estimated at 6.46 billion. And then growing over the next several years, as I shared with you the numbers I got from the Wall Street analyst estimate. So given those Wall Street estimates, those suggest that the company's free cash flows are going to grow by roughly 31% over these next several years. And then from that point onward, I'm going to forecast the company grows at a transition period growth rate at 15.56%. So half the rate of the 31.1% over these next 4 years. I'm going to forecast them over the next 5 years. So if between 2029 and 2034, I have the company growing its free cash flow at 15.56%. Starting in the year 2035, I'm forecasting the company settles down to its longer term growth rate of just 6%. At that point in time, I feel the company will be large enough and will have attracted enough customers, enough riders to be at its longer term settled down growth rate of 6%. So of course, when we're forecasting these cash flows, we also need to discount them back to today. So first you get the cash flow, for instance, for 2030, which is expected to be $17 billion. But the present value of those cash flows are $8.5 billion, or about half of that. It's because money in the future is worth less to us than money today, right? If I were to ask you, would you rather have $100 in your pocket today or $100 in your pocket in the year 2030? I hope all of you will say that you'd rather have $100 in your pocket today. And so if you're going to delay receiving your money at some point in time in the future, that money's going to be worth less to you. And that's why we're discounting these cash flows. And the rate I'm using to discount the cash flows are 12.24%. And the way I'm arriving at the weighted average cost of capital of 12.24% is using the capital asset pricing model for the cost of equity with the beta of 1.34, risk-free rate of 4.5%, and a market risk premium of 6%, with a debt-to-equity mix of 90% equity and 10% debt, given the company has $11 billion in debt and a market cap of $137 billion. I'm assigning a cost of debt to Uber of 9.5%, and when I combine that, I get a weighted average cost of capital of 12.24%. So when I use that weighted average cost of capital to discount those cash flows, I get a value of their operations of $246 billion. But we're not done yet. Let me draw your attention here now. To the value of operations, we need to add the cash balance and subtract the debt balance, which brings us to the value of equity of $242 billion. Then we need to divide the number of shares outstanding of 2.154 billion. And that brings us to our intrinsic value per share of $112 per share. Now, if you compare that with today's market price at $65 a share, you'll see that I feel Uber stock is undervalued. My intrinsic value suggests the price over $100 per share. It's currently selling at $65 per share. Okay, so remember though, these are just my calculations and my estimations of what the price is, what the stock is worth today, what the business is worth today. Doesn't mean the market will ever agree with me on this price. The market will and can keep Uber stock undervalued for the next year, for the next 10 years, for the next 20 years, or forever. It may never agree with me on my calculation of the intrinsic value per share. So take that for what it is. It's just a calculation, just an estimation. Doesn't mean the market price is going to get to that level. But that's the thinking behind this calculation, is that eventually the market price will converge to the intrinsic value I feel the stock deserves. Now remember, this is for informational purposes only. Use this as a part of your own due diligence. Don't use this as the exclusive calculation you determine to make a decision about Uber stock. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.